Hi, everybody. Welcome to episode 61 of the GrowCast show. I'm your host, Lisa Marie. And today I'm with Hadziq, and he's an associate at IAM Advisory Group. Hi, Hadziq. Welcome to the GrowCast show.
Hi, Lisa. Thanks for having me here today.
Okay, let's start with what does being better than normal mean to you?
All right. Being better than normal means always striving for continuous improvement, being a better version of yourself. With that said, you can create a better, meaningful life, not only for yourself, but also to the people around you.
And what makes you better than normal?
Wow. Okay. So what makes me better than normal is I've always have this drive for continuous improvement, be it in every aspect of my life, be it in relationships, my family, friends, or even work or personal gains or personal goals, right? With that, I create a positive impact, not only to my life, but especially to the people around me. And the positive impact that I gives me a sense of satisfaction in whatever I would do.
Wow, very profound. Why did you decide to join the financial industry?
Okay, it derives down to the core of what I want in my life. I'm a family man at first. I have a wife and I have a family. I have a daughter that I really enjoy spending time with. And to me, they are all that matters. So I was in 5 years in logistics and supply chain industry. And in that 5 years, I was working overtime most of the time. And my income was kept to a certain level that I always feel that it wasn't enough. And I realized that of all the many jobs available, being a financial advisor is one of those jobs that gives me the flexibility of time and at the same time does not put a cap on my income. So I can earn as much as I want, at the same time have time for who that matters most in my life.
So you came from a job with a very stable salary, and then you went from that to a commission-based job. Were you scared to make that leap and that jump?
Okay, yes, definitely scared. Right, as it's human nature to always feel scared in trying to do something new or something that is uncomfortable. And I asked myself first, what is stability? Is having a capped monthly income stable? Or maybe this month I don't earn, next month I earn about 5 digits. 10,000, 12,000, for example. Is that stability? For me, that is still considered stable because I still earn the same or in fact, even more. Mm-hmm. Yep. And I already know what I wanted at first place. And the distance between, the greatest distance in the world is between knowing and between doing. So I only had to find the courage to do what is needed for myself.
Wow, I'm feeling very inspired over here. Okay, so what makes your financial advisory practice different from all the others?
Okay, so I'm actually quite of a nerd in a sense where I enjoy sharing knowledge. I just find the satisfaction of just sharing knowledge, right? And this job gives me the opportunity to just do exactly that, right? I do not care if when you meet me, what the outcome of the appointment will be. I'm here to empower you with the knowledge necessary for you to make better decisions, financial decisions in your life.
Is the barrier to entry to become an FA, is it low or is it high?
Interesting question. So I wouldn't say it's exactly low or exactly that high either. Coming from a background that of an introvert, and I did not have any financial experience before this. As long as you have the moral character, you have the courage to do what is needed, the discipline to continue your business, and the drive to make a better life for yourself, I believe you are more than capable to become a financial advisor. However, there is certain qualifications that you need. You need a minimum diploma, and you do need to pass at least 4 papers to get your license, right? And these 4 papers, some people can take about a year, some people take months, some people take weeks. And for myself, with my background, I did it in less than a month. So it's definitely possible.
How much and how do you earn money?
I earn full commission based on the productivity of my sales. With that said, there is no cap. I earn exactly on how much I put my effort in. If I put in more effort, the more I earn. If I don't put in effort, most probably I don't even earn at all. With that said, there are times where I don't earn at all, right? And I do earn 5 digits at some months. I think the highest I've earned was actually almost 12,000. Yep. And I do have colleagues who can go up to 30,000 a month. It's really possible. It really depends on how much effort you put in. There is no cap.
What is the difference between rich and wealthy?
Okay, so there is a lot of perspective between being rich and being wealthy, right? In my perspective, being rich, maybe rich in money, does not necessarily mean you are rich in your health or rich in your time with your family or friends or who that matters most. Being wealthy means having an equal richness in all aspects of your life, right? I want to be rich with money. I want to be rich in time. I want to be rich in health, right? And it's definitely possible. And most Singaporeans, they don't want to become rich. They want to become wealthy, right? They don't only want to have money. They also want to have time. They also want to have their health.
Yeah. Who is financial planning not suitable for?
That's an interesting question because usually it's the other way around. Financial planning is not suitable for those who are engaged in illegal activities, example, or maybe warfare, or maybe people who are mentally ill, right? With that said, financial planning is suitable for almost everybody else, right? If money is important to you, then by all means, financial planning is important to you, unless you tell me that money is not important to you, right? But I doubt so that's the case because for many Singaporeans, money is very important. In fact, if money can't buy you happiness, money can solve you a lot of problems.
Okay. So when you talk about insurance for Singaporeans, what is a must-have and what is a need?
Right. If we look at the necessary insurance that Singaporeans need to have, we dive in deeper into the coverages first.
Yeah.
The necessary coverages would be accidental death, TPD, which means total permanent disability. If you have disability income, you can put it inclusive with that. And critical illnesses, which we also call CI, and also your hospitalization plan, right? With that said, you do need your hospitalization plan to cover your hospital costs. You do need PA, personal accident plan, to cover your outpatient costs and also your accidental death. And you do require a term plan to cover the rest, like your death coverages, TPD coverages, and critical illness coverages.
What role does insurance play in a financial plan?
In layman terms, insurance is to cover the cost of unexpected events such like death, TPD, critical illness, accidental death, the coverages that I mentioned on earlier. So if anything happens, anything unexpected happens, the risk of your financial stability is transferred over to your insurance. So your insurance can cover all these financial burdens so that you can have a peace of mind that your finances are still in check, are still okay, right? So most people think that they are invincible. I won't be getting all of this, right? Insurance is not necessary. But the catch is you need to get insurance when you are healthy, because if anything unexpected happens, by then it's going to be too late. So that on your worst days, not only you are covered, but especially your family members are covered. End of the day, you don't want your family members, like maybe your grandparents or your parents, your spouse, your children, to be suffered with financial burden just because of your health that initially was your responsibility.
How much CI coverage is necessary?
To look at CI coverages, we look at the typical cost in Singapore for CI. CI typically costs about 100k to 200k yearly, right? With that said, to have sufficient CI coverage, the rule of thumb is to have 5 to 10 times of your yearly income. This would give you sufficient safety net if in any cases of a critical illness, right? Most Singaporeans, it doesn't scare them to pay for accidental death. It doesn't scare them to pay for minor injuries. What scares most Singaporeans is the cost of critical illness.
Yeah. Can my insurance premiums increase over time, and what factors affect this?
Insurance premium can increase over time for a lot of reasons. It really depends on the policy that you have. So some policies increase because of age. The higher your age, the higher your premiums. Some insurance, some policies is because of your claims. The more you claim, the higher the premium increases. In certain cases, the premiums can increase because of underlying or existing health conditions. And most recent example, the increase of integrated shield plans or hospital plan, it increased because of government regulations that they need to cover for increased healthcare costs in inflation, all right? So this also impact your premium increase.
But why do I need my own personal insurance? Why can't I just use my company insurance? Isn't that enough?
Right. I do get a lot of this question. Company insurance is definitely good to have, but it is definitely not enough. The thing about company insurance is tailored to cover a group of people, but what you need is insurance that is tailored to your personal goals, to your personal needs, right? With that said, company insurance have limited coverages that not necessarily cover your needs entirely at all, and it's good to check at your terms and conditions because certain company insurance only covers you during duty or on the way to work, on the way back to work, or while at work. And then I will ask you, what if anything happens to you outside of work? You are technically not covered if you do not have a personal insurance. And company insurance are tied to your employment. Let's just say you leave the employment, that's it, you don't have that, right? And it's not confirmed that your new employment will offer you the same, maybe not at all, the coverages. Yeah.
Why are long-term investments essential for building wealth?
Long-term investments is definitely a necessary for almost every Singaporean, right? Studies have proven that with the right funds, the right management, long-term investments will reduce the chances of loss. So the longer you invest, the lesser the chances of loss. Let's just say we look at 15 year, all right? 15 year and above, the chances of loss reduce to almost 0%, right? It doesn't matter whether the market goes up or goes down because you're in there for the long term. It's not about timing the market, it's about the time you spend in the market. And the longer you spend in the market, the more money you put in, the more money you compound. The more money you compound, the more money you grow. End of the day, that's how your money grows exponentially a lot more.
Why should I invest with an agent when I can do it myself?
Interesting question. So I do get this question a lot. They do not want to invest with a financial advisor because they believe they can do it themselves. And by all means, if you can do it yourself, then go ahead. There's nothing wrong with that. In fact, if you know how to do it yourself, you should, right? But most cases in Singapore, people do not even have the time to do it themselves. What I mean by that, you do need time to research the market. You do need time to know, to study the market. Do you have the resources, the tools to actually make the right investment decisions? Right? Most Singaporeans, this can be very overwhelming. And like I said, they do not even have the time to do it. Even when they commit to do it, they commit it halfway. And then afterwards, they don't have the discipline to keep on continuing it. Right? So with that said, there is fees, right? Some people don't want to invest with a financial advisor because there are fees. But take it like as if a service fee so that you can sleep at night with a peace of mind while we are the ones who worry about your financial growth with your investments.
Savings versus investment. What is the difference?
Right. Imagine having a pocket, right, where you put your money in, but this pocket has a hole on it, right? But this pocket also does not have a cover. You can put in and take out from this pocket anytime you want. It's just that there is a hole in it. So this pocket is your savings, and this hole is inflation. No matter how much money you put inside this pocket, it will always get eaten up by inflation. And with that, you will need savings for your short-term needs, for your short-term liquidity. You will need it for your daily uses. But it's never meant to be used for wealth accumulation. So on the other hand, you have another pocket. Sometimes there is a hole, sometimes there is no hole, right? But this pocket, you can only put in, and does not necessarily mean that you can take it out. You can just put in, but this pocket multiplies, grows your money. So the hole represents maybe sometimes there is market crashes, you lose a bit of your money. But the fact is that pocket will always grow you money. So it's important to find a balance of both. I'm not saying that one is more important than the other. You will need both pockets. Savings for your short-term liquidity, investments for your long-term growth.
That's a good point. I think a lot of people don't take into equation the inflation of having savings.
Yes, there's a misunderstanding that the more you save, the more you accumulate your wealth. But in most cases, that's not the case because inflation grows, eats up your money exponentially a lot.
Yeah. How much does the average Singaporean need to retire?
It really depends on what is the retirement goals. So for some Singaporeans, they just want to have the basic needs to retire. The average age to retire in Singapore is about 65, right? And the life expectancy in Singapore ranges around 80 to 85. So we're looking at 20 years of retirement. So if you're looking for just basic needs, right, just to survive through your retirement years, you will need about 1.5k to 2.5k monthly. With that said, by the time you retire, you would need about 360k to 600k of money, of savings, of whatever money that you have, right, of your wealth, to survive through basic needs in your 20 years of retirement. But if your retirement years looks like you're going to travel, you want to buy things that you want quality retirement years, then you're looking about 3K to 6K monthly income in your retirement years. And that means by the time you retire, you would require about 800K to $1.5 million, right? That's the reason you have to invest early so that your money can compound enough for your retirement years.
How much should the average Singaporean be investing?
A good ballpark should be around 10% to 15% of your monthly net income, right? So this percentage, this benchmark can differ from different people who with different financial goals. I do meet people who have a bit more cash flow, lesser needs and lesser wants to buy. So their savings are even more and they are more aggressive in trying to grow their money. They put aside 20% of their monthly net income just to grow their money. So, but as an average Singaporean, I think 10% to 15% of your net income should be enough.
Okay, halal investment versus haram investment. What is the difference?
Right. So halal investments are technically investments that are correlated to the Sharia law. With that said, any investments that does not include haram aspects, if the investment include haram aspects, then it's a haram investment, right? So what are haram investments? These are investments that are related to alcohol, tobacco, pork, some aspects are weapon manufacturing, maybe adult entertainment. I think you get the point. Anything that is haram with the Sharia law is an haram investment, right? With that said, there is also another thing. A company with 33% above of debt ratio would also be considered not Sharia compliant. With that said, there is halal options out there. For example, there is a Sharia compliant fund, and this fund is regularly checked and maintained by Muslim scholars, approved by Muslim scholars, right? So you don't have to worry about any haram aspects. And if you do invest in a portfolio that is not 100% Sharia compliant, then you would require to go through a process called purification.
That's interesting to know. What is purification in Sharia investing?
Right. So, for example, if you're investing in a portfolio that is not 100% Sharia compliant, example, there is 3% maybe in alcohol or tobacco, right? Purification means taking out this 3% out of your portfolio and donating it away and not be used for your personal gains, right? So, with that said, what if one day you don't know how to check, you don't know how much your where your investments are going, what is the percentages to what, right? Then you can take 5% as a blanket value for purification.
Savings versus emergency funds. What's the difference between the two?
Right. So people know emergency funds as savings as well, right?
Yeah.
So it's quite true. Emergency funds is part of your savings, okay? But emergency fund should be a fund that is untouched unless there is unexpected events, right? Unexpected events like what? Maybe you go into an accident, you get into your hospital, all these unexpected costs should be used for your emergency fund so that your savings has a buffer, has a safety net that does not like totally wipe out your entire savings. So younger generations or some people that I know, they spend their savings, spend their emergency funds to feed their wants. Like I want to go traveling, I want to buy this, I want to buy that. They use their savings, but they are not using their savings per se. They're using their emergency funds, which should be untouched, right? And if anything happens, then you're in trouble, right? So in my opinion, savings is anything above the emergency fund.
Interesting. Yeah, I always used to think emergency funds and savings were just the same thing. Yeah. Incomes versus assets. What is the difference?
Right. Imagining you do play Monopoly, right?
Yes.
Right. You're familiar with Monopoly.
Yeah.
So imagine going around and around the Monopoly board, going through Go every time. Every time you go through Go, you collect $200, right? So that's income. That's income, right? So if you go through round and round the Monopoly board and then you buy the properties, right? That means you are buying assets. The difference between the income and assets is the assets generate you even more income. And the sad thing is people these days, they go around and around the Monopoly board without buying any assets. They just collect that $200 every time. And the liabilities around keep on increasing and increasing. And if you're familiar with the game, the person who buys the most asset and manages it well are usually the winners. So it's important to get yourself an asset, and the easiest asset for you to get is an investment.
Why should we diversify our investment portfolio?
In simpler terms, don't put your eggs in one basket, right? I think everybody know this sentence. If one basket drops, you at least have the other basket. So the same thing applies with investment. There are always risks involved, but diversification reduces this risk, right? If anything happens to one market, you have at least another bucket that can cover up the loss. So technically, it reduces the risk of you losing money. Another reason you should diversify is you can take the opportunities of growth from different industries. Let's just say tech is doing well. Maybe healthcare is doing well. All right. Why not just take advantage of the growth opportunity that they both can offer? Maybe diversify some to tech, diversify some to healthcare, and you can take advantage of both of their growth.
What is the 50-30-20 rule?
So the 50-30-20 rule is a very popular and simple rule that people use to budget their finance, right? The finance that we're talking about is your net income, your monthly net income, right? So 50% of your monthly net income goes to your needs. What are needs? Your bills, example, or your necessities, right? And then 30% goes to your wants. What are these wants? These wants are things that you want to buy. Your entertainment, for example. Maybe you want to do something fun. Okay, all this goes to wants, right? You get the point. And then the last 20% goes to savings and investment, right? But these percentages can vary for different people. You can follow it, but some people, especially the younger generations, they don't have much needs. They don't have much wants to spend on. With that said, their savings can be a bit more. So I do meet people who put in a bit more percentage on their savings and their investments, and they can invest a little more. Yeah.
Recently, we heard that HSBC Life got awarded the best high net worth individual financial advisory firm. Can you tell us more about that?
Right. Yes, you're right. So HSBC Life got awarded as ranked number 1 best insurer by high net worth individuals in Singapore. So this really it says a lot about our commitment in offering the best expertise to other people for their needs and their wealth. And it really does showcase the level of service that we offer to our clients.
That's great. Hadziq, what is the best place to get in touch with you if anyone wants your advice?
Well, okay. So I'm actually very active in Instagram, right? My Instagram handle is HADZIQRSHD, right? You can just search my name if that's hard, all right? And you can just look for me at these handles and my phone number here, right? Reach out to me. Yeah, I'm a very nice guy.
Okay, so is one investment plan enough?
To look at it in an optimistic view, if one plan is all you can have, then you should have at least one plan, right? But if you can afford more than one, then by all means, I would recommend you to have more than one. Having more than one investments mean you have more than one asset. Having more than one asset mean you have more income flow, you have more growth, you have more paths to grow your money, right? So if you have the chance to have more than one, first of all, get a long-term one. Secure your future, secure your retirement, right? And then the remaining investment plans can be short-term to mid-term. Maybe 10 years down the road, 20 years down the road, right? But first of all, secure the long-term one. That's the most important.
Okay. What are the tools that you use in your financial advisory practice?
I'm glad you asked this. So where I'm from, which is IAM Advisory Group, we have an exclusive fintech tool that we call Merlin. All right, what does Merlin do? Imagine going to a hospital, going to a doctor checkup, right, for a health screening, and you get a health report. And this health report will give you ratios of your glucose level, blood pressure level, cholesterol level, and so on. There's so much things about your health you can take a look at, right? So similar to Merlin, you can get a financial health report. And in this financial health report, you can see things like your ratios of your expenses, your income, your net worth, your debt, your investment ratios, right? There are many ratios to look at, right? And apart than ratios, you can also look whether you are sufficiently covered. Example, your death coverage, your CI coverage. Are you overpaying for over coverage, or are you underpaying and it's not enough, right? So these financial health reports can determine the right balance for yourself. Write the extensive personalized report. So my favorite part of it is the Dream Manager. So what is the Dream Manager? The Dream Manager is a simulated life event, like your own life. Let's just put it into a simulation, right? And in that simulation, we can add in milestones, we can add in dreams, and you can play around. Maybe I want to buy a car at this age. Maybe I will get pregnant or have a kid at this age, for example. And maybe I want to buy a new house at this age. And these decisions we can add into that simulated event, and we can see if it will affect your financial health or not. So end of the day, all this will help you make better financial decisions for your life and your future.
I actually tried that thing and I did the Dream Manager, and then I found out that I cannot afford to have any dreams.
Oh my God. That means you just need to
work harder,
save a bit more, and invest a bit more.
Yeah. Thank you so much, Hadziq. It was very good to have you. This was episode 61 with Hadziq from IAM Advisory Group on the GrowCast show. Thank you so much.